Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway here with a currency report update. So in today's video, what we're going to do is we're going to look at the DXY, we're going to look at the euro dollar, as well as the USD JPY, Japanese yen. And the idea here is we want to look at the charts and see where the next moves could be. Is the dollar going to fall? Is it going to gain? How are these other currencies going to behave? All right, so let's dive right in. What we see here on the US dollar, and I'm going to zoom out here a little bit, is that the dollar is in a pattern where it's been making lower highs, right? You had this major spike in 1985 on the DXY. We then had a secondary spike in early 2000, 2001. And then really we had this little minimal spike right here in October of 2022, or at least it topped out then. Now, remember, that was when the bear market was ending. Ever since then, it's kind of been trending lower. Now, the big thing here that we have to pay attention to is that you have this underbelly. Ever since the COVID collapse in '08, the dollar's been holding this uptrend, right? So again, you've had minimal bounces, you've had big bounces, right? And then you've had smaller bounces along the way. But this zone from '08, basically, again, the beginning of the financial crisis, has always had higher highs to it. And that's really what's drawing my attention here, because if, for instance, we were to break this trend zone here, which basically goes from about 96 to 94 on the DXY, that's where you would have to get concerned that the dollar is going to be more in a free fall type state. Now, I don't expect it to go straight down. I don't think anyone does. But overall, would it be a more vertical kind of move, then a bounce, then another vertical move and a bounce, eventually finding its way back to that 2008 level? And that's really what technical analysis would suggest here. And again, think about that. Think about the DXY getting back to 70 or 71. That would really be eye-opening and really tell a tale about money moving away from the US dollar, away from the US, maybe even as that reserve currency for the globe, right? For the whole entire world. So this is really where we are. Now, what we see here is that when the Fed announced their recent interest rate cut of 25 basis points, if we go to the daily chart, what we can see is that on that exact date, the DXY dipped and then hit that upper range of that support and began to rally up. And it's kind of had 3 up days, 2 pullback days, 2 big up days, 1 pullback day. But ultimately, the dollar has gained substantially from basically 96.20 back to 98, currently around 20 as well. So that's a pretty big move up. But notice what's happening here. In the short term, the dollar has now hit some resistance, and we can very clearly see it, right? If we just stretch this trend line across all of these pivot highs in the near term. And really, if we bring this over here, you can even see right here, yeah, it did get above and then came back and consolidated and broke down, resistance, 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 and now resistance again. And so really, for me, when I look at the bigger time frame on this, I see a pattern of weakening dollar, right? The weakening DXY. So essentially, it's telling us that the dollar is weakening against major currencies. Now, you might say, well, why weakening when it's making higher lows? And that is true. But more than anything, it's the high, the major high here, the lower high, and the lower high, and even the lower high here, all can kind of in the last, basically in the last 17, 18 years hammering on this area here. And if you looked at this pattern amongst many, many patterns of the same form, let's say commodities, let's say stocks, crypto even, this pattern generally leads to a breakdown. All right. So yes, we've tested this area and we've bounced, but the mere fact that it's staying close to that here, if it continues to hammer, eventually we'll see it break into this zone and eventually break below the zone. And once that happens, that's not good for the DXY, the dollar against a basket of currencies. And what we've really seen since '08 is that the Federal Reserve has been the gold standard of central banking, right? Now, listen, you could agree, disagree with how they've handled things. I certainly do in many instances. But the rest of the world, in terms of investors and the US dollar, have cheered the Fed as being the gold standard for central banks, right? I mean, it is what it is. Now, what this tells us is once that trend line breaks, essentially what we're going to see is the Fed is no longer viewed as the gold standard, which makes a lot of sense if we think about it, because Trump and the administration are slowly making the Federal Reserve less independent. whether it's putting a governor on the board that's handpicked, that's voting for multiple more rate cuts, even though inflation is high, or if it's next May, basically kicking Powell out and putting in someone that the president knows is going to make cuts, more aggressive cuts in interest rates. But ultimately, the writing is on the wall here. I hope you guys see that, how the chart is essentially telling us what we know from the headlines and what we know to be coming in the future, where the degradation of the Fed will no longer make it the gold standard like it was in '08, and it kept making these higher lows, but eventually break down and head lower. Now, the US dollar JPY here is in a very tight pattern. All right, so the dollar here, this is again the US dollar versus the Japanese yen. So for every $1 right now, you get about 149, almost 150 yen. The idea here is you have a short-term bull flag that's beginning to break up. So it looks like the dollar will strengthen against the yen, which will push this up into this level of resistance. But when you have patterns that have flat bottoms and down sloping trend lines, again, notice flat, 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 high, lower high. The idea is it hits here, lower high. That's overall a bearish pattern. And we can also see that kind of here with this move down and then this kind of sideways consolidation, right? So even though we're trending up towards resistance where the dollar yen, essentially the dollar is going to gain strength against the yen, pushing the yen against the dollar, in dollar terms up to about 150 to 152. This overall, look at down move inside bar. What type of pattern is that? That is a bear flag. And so while near term, the dollar yen probably moves up, the longer term is down, then a bounce, and then a breakdown further. And again, essentially, this tells us longer term that the dollar will also weaken substantially against the yen, and that'll draw the dollar yen down towards 128 to 125. And so while near term it looks like the dollar will strengthen very near term against the yen, maybe pushing it up into resistance, longer term we see the dollar weakening. Same thing can be said here for the euro. The euro is actually the strongest of all the charts here. The euro has broken out of a long-term downtrend starting back, when, during the financial crisis. So the dollar essentially was strengthening against the euro ever since the financial crisis. And then eventually, what did we see? We see a breakout right here. And while you can have checkbacks, and it's just very common where you get these smaller pullbacks here, right? Where we get these smaller little drawdowns and pullbacks in the euro dollar. Eventually, again, the breakout's the breakout. You got to play it for the move higher, right? I mean, a chart doesn't break out like this and then just peter out and just be done, right? Generally, yes, it can pull back, but then it goes and makes higher highs. It's already broken out. It could even pull back to the scene of the crime here. But the point being is that would be an amazing opportunity to buy the euro dollar here, the euro USD, for a move substantially higher. So, really when we summarize all of these charts, right, the DXY, the dollar yen, the euro USD, it essentially comes to the same conclusion, which is that while the dollar in the near term will have bounces, the dollar will weaken overall, continuing down on the DXY to probably 72 over the next, let's say, 3 years or so. And the euro and the yen, even if they pull back, the euro pulls back, the dollar yen inches up, but then eventually both those currencies will strengthen substantially against the dollar. And again, it makes perfect sense. When you look at the amount of debt the U.S. has, when you look at the central bank and how it's slowly, their independence is being degraded, all of these things stand to weaken the dollar in the global picture versus these other currencies. And it's not to say that those other currencies aren't going to have issues. They certainly will. But remember, it's the dollar versus these other currencies, not the dollar versus something else or the yen versus something else. It's always in terms of another currency. So we have to keep that in mind. All right. So I just wanted to keep you guys in the loop on this currency stuff going on in the markets. I do think this plays a big role in the next financial crisis, whenever that may be. The fact that the dollar, again, continues to weaken. Now, you could look at it and say, all right, well, the dollar weakening makes our exports more important, or cheaper, I should say, for the rest of the world. You're right, but it's going to take time. And again, we don't have the infrastructure yet set up in this country to really become an exporter. And again, that is something that I think eventually we will get to, but we probably will have to go through a hard period in between there in the financial markets. All right, you guys have a great one as always. Thanks so much for tuning in. Thanks for being a supporter. I'll do my best to keep you guys updated. Take care.